Josh joins us now to react to the quarter. I'll tell you what, you gave the viewers the reason why you like it so much, and I suppose they lived up to the hype.
I thought it was a really great report, and I enjoyed Andrew Ross Sorkin's interview with Dara this morning. I think the big takeaway here is be very careful about creating buckets and categories and just randomly throwing stocks into them and treating them as though they have some sort of correlation to other stocks. What Uber did essentially during the pandemic was substitute the loss in the rides business with the eats business and the delivery business. And now coming out of the pandemic, they have both firing on all cylinders. This was their best quarter ever. Uber spent 2 years being lumped in with the, quote, work from home stocks or stay at home stocks or pandemic plays or whatever. And it is absolutely not that. They have two very large, fast-growing businesses. They have 131 million users on the platform. And this is not users like Twitter users. This is users who literally pay them in actual dollars, not in eyeballs. And that is a very large platform, and it's nice to see Wall Street starting to wake up to the potential of this platform today.
Stocks, was up a lot initially. It's given a little bit back, but it had a big move into the number. So maybe it's a little bit of sell on the news. I want to read you something that Brad Gerstner gave to me, his reaction to it, and then get your reaction to him. He told me, quote, Uber was the poster child for the unprofitable Silicon Valley excess culture. A year ago, people shouted us down that the business model would never work. But now Silicon Valley is starting to get fit, and Uber and Meta are helping lead the way. Their network effects are accelerating, and Dara is pressing the advantage by growing revenue without growing expense. But there is a lot more work to do on margins. This is just the start. The company could be far more profitable at this scale, which would increase its moat and competitive advantage. You concur?
Yes, Uber did $8.6 billion in revenue over the last quarter. That was a 49% increase over the prior fourth quarter. We're talking about really big growth. Granted, Omicron was a factor in Q4 of 2021. But even if you pull that out, the company is on pace to hit $45–50 billion in revenue within 2 calendar years. And they think that they're going to be profitable on an operating basis this year, not in the future, not someday, not if they could just add another 50 million users, like based on the size of the business now. So they reported a really big surprise profit in Q4. Most of that was because of subsidiaries that they have a stake in that have been written up. Okay, that's fine. Throw it out. Focus on the core business here. They'll be profitable in Eats. They'll be profitable in rides. And hopefully someday, when the freight business grows up, they'll have a three-headed monster with, again, 131 million users and counting who are actually spending money on the platform. This is a very large company. Market cap, I think, does not appreciate what the potential is in year 2, in year 3, and year 4 of profitability. Yep. And so that's why I'm a longer-term shareholder and not a trader here.